Yo, what up everyone? In this video, I want to review 4 different trades that I took. I want to talk about the right mentality we need to have as traders. 2 of the trades that I took were very shitty trades, and 2 of them were very, very good trades, and there's a lot to learn based off of them. I want to break down what I did wrong, what I did right, and I guarantee a bunch of you watching this are going to relate exactly what I did, and I'm really confident that in this video, it's going to help you all take better trades in the future. So be sure to subscribe to the channel, and I recommend following me on Instagram at Entrepreneurship. I'm going to link this in the description below to follow me. On here, I post daily trading recaps along with very good trading tips and tricks that I guarantee you're not going to find anywhere else. Link is in the description below. You're definitely missing out if you're not following Entrepreneurship. But now, let's get right into the review. Netflix was the first trade that I took. This was in the pre-market plan. Essentially, what we were watching was we bounced off of demand last week. On the way up, we were rallying, creating demand on the way up. Yesterday, November 15th, on Monday, we hit supply, rejected it. And then today, on Tuesday, November 16th, we really weren't gapping down. We were just hanging out at this supply zone, not really selling off. And what we were watching was for a breakout above supply, targeting an all-time high break at 691. So as long as we see volume and we get intraday clues to get long, and my risk to reward makes sense, I don't mind putting the trade on. Now, some could argue that it's lower quality, and I agree with that because I was longing inside of a supply zone with really no consolidation or really no true interest from buyers. But some could argue, at least myself, that I have taken trades like this that just rip through supply and we get a crazy rally. So not really a good trade, not really a bad trade, but to start the day, it put me in a hole, and I won't lie, it was very frustrating. 2 minutes, I was up pretty nice. I think I was up about $1.50 on the contracts. And then within the next 2 minutes, we got an immediate stuff, and I exited this trade right down here below 684. Just wasn't comfortable with the way price was trading. I honestly did not have a plan, and that goes against my rules and my edge. So in my journal, this is a very shitty trade. It could have been avoided. I could have waited for more context. I could have waited for more volume, but mentally it messed me up, and I put myself in a hole to begin the day. Now, the important part of this video is this trade right here on SPY. So to gain context, let's just go over the pre-market plan. I post these every single day in the Discord of the setups I'm watching, some market context, and the levels of interest with some chart patterns. So today, SPY was bouncing off of this 46.73 demand zone overnight. So you can see we came into it and bounced at it, and we were moving higher. If we got below it, we were going to sell off a little further, but to the upside, we were rejecting 4686 supply, 4688 supply. I said bulls need to create demand inside of it, and we will go for a rally to test all-time highs. Now, in the intraday commentary tab, where I post my updates throughout the day of what I'm seeing, develop in real time, at 10:02, I said I'm not seeing any major selling inside of a very key supply zone on ES and Q. Chances of more upside are higher than the downside right now. 4,700 looking to target, then the 47.05, and then 47.10 all-time high. Those were my targets for this trade. Keep that in mind. So now going to a 1-minute chart intraday. With that context, we bounced off of demand, made a move into supply. Just like that Netflix trade, this has been a reoccurring theme in the market. We move inside a supply, we don't find any sellers, we usually consolidate inside, maybe pull back to grab more liquidity, and then we keep moving higher as long as demand gets created inside of supply, or we just slice through it like it isn't even there. So at that point, I said that in the intraday commentary tab. I was long right here at 10:01. I liked how we were consolidating inside of supply, making higher highs, making higher lows, and I wanted to break above this high a day right here, targeting a $4,700 break, 47.05 supply, and then 47.10 was all-time highs. So now I'm long SPY calls. I think I got long the 469 calls, and this thing starts moving. We break the high, and we fail to stay above the high, which is a very bearish sign. The market moves up. Still failing to go. We still are putting in higher highs, still are putting in higher lows. So the trend still is in play, but it wasn't until like 10:20-ish where we start getting out of the trend and start selling off. And at 10:29, I stopped out of this trade. Let me see, pull this up here. Stopped out of SPY calls. I will look to re-enter if we test supply again with volume. So at this point, I'm down about 30 or so cents on these 469 calls. And now I'm 0 for 2 to start the day. Very frustrating because, my analysis worked out pretty well. It was correct. And I felt very confident with the trade. It's something that has been working in the recent market conditions. And, starting the day in a hole now, in a deeper hole, I'm 0-2. And mentally, this messes you up. It messes you up because it instills this fear in your mind, instills hesitation, and your emotions and ego will do the trading versus you doing the trading and reacting to the market. So at that point, I stopped out. I posted if we could start to bid above the 4690.92, I may look to re-enter to take out higher day than $4,700. It's a very large balanced area. We need a breakout above the balance. Now keep that context in mind with SPY. That's going to be a very key point for the next trade that I take on SPY. But as this was going down, Lucid hopped on my radar at 1037. I said old supply is acting as demand. We're currently basing out of it. Just need a move up to validate demand. I'm watching the $50 area to speculate this. And at 10:39 a.m., I said I'm long Lucid shares at $49.42, 10:39. So going to the chart, what I liked here was this has been on watch for the past 2 weeks. Some nice volume coming into the market. Had an earnings to aid this gap up and earnings to aid very key volume coming into the market. So if it wasn't for the help of earnings, obviously we wouldn't have such high volume, but we did 242 million shares today compared to a daily average of 65 million. And this indicator at the top up here, a Investor-Trade member actually created it, and it will be available soon in the Discord for members. It's not available yet, but this shows the average volume today compared to the daily average. So in the first 5 minutes today, we did 6.8 million shares compared to a daily average of 2.5 million in the first 5 minutes. So 200% on that, 271% in the first 15 minutes, over 200% in 30, the first hour, and 90 minutes. So obviously we have volume coming into the market. Obviously we have interest. Now we need to find intraday clues that we could get long where our risk to reward makes sense. So the market pulled back into this demand zone. We had somewhat of an inverse head and shoulders pattern forming at demand. And what I liked here and why it came on my radar was this area right here, especially that we are at an existing demand zone. This screams that demand is becoming created as long as we gain interest and as long as we gain volume building to the upside and buyers show effort. If they show effort, they're going to get rewarded. If they get rewarded, that is just going to fuel another rally higher. So I was speculating that new demand was going to form. A good gauge was above 50, obviously above 49. But this became on my radar once I saw this heavy volume push like this out of demand and out of that inverse head and shoulders pattern. I got long at $49.42 at 10:39 at this point right here. My stop loss was below $48 because if we pulled back into this range, this kind of would have ignored that thesis I just explained. So keep in mind, as this is happening, there's a SPY trade developing. And I'm in that hole. I'm trying to dig myself out of that hole. Not forcing it, but I'm just reacting to what the market gives me. So I said I'm long Lucid shares at 49.42. Scrolled down a little bit. And then we finally get that break above 50. Volume starts coming in. And when we're at all-time highs, we're not going to have any supply. We're not going to have any resistance. And it's very difficult to gain a target when there's nothing to play against it. So you have to use either whole and half numbers or use the tape, the time and sales, level 2, to kind of gauge the auction, see if sellers are stepping in, see how price is developing. But as soon as we got above pre-market highs at 11:45, I scaled out about 65% of my position. I said Lucid next resistance is pre-market highs. I'm up about $1.50 on the shares. Not a huge fan of the action, but I'm going to boost my stop loss up higher. May look to scale some at pre-market highs. Nice rejection, pre-market high, not scaling yet. Beauty, protect yourself. It's hard setting a target now. And at 9:45, I'm out 65% of my position at $51.30. Stop is $49. Gonna turn this into a trend move as long as we maintain higher highs and higher lows. The key is you're never going to sell at the top and you're never going to buy at the bottom. It's almost impossible. Your goal is to follow your plan and respect your risk. So we start continuing up, and at 12:45, I sell into strength, into this heavy volume at $52.80. I scale out another 25% of my position, and at this point, when I'm up, $4 like this, I'm only in 10% of my position in case this thing doesn't want to keep ripping. I can't predict what's going to happen. I just got to manage my trade and respect my risk. We start consolidating, still making higher highs, still making higher lows. This thing never pulled back. And 30 minutes before the market closed, I exited my full position at $54.18 when it looked like this. So keep in mind, because at the time I was in this rally, it was a stress-free rally, maintaining the trend, never hit my stop loss, had no reason to worry, and didn't see any significant signs of price slowing down. As I was in this little rally right here, I'm inside of this SPY trade, or I'm stalking this SPY trade. So going over to SPY now, keep in mind the context I told you earlier. I just walked through that Lucid trade. At the time this is happening, I don't normally do this. Like I said earlier, if we could start to bid above 90 to 92, I may look to re-enter. If we could take out high a day, and then $4,700. So at that point I was in Lucid. Said I'm watching for it to play out. It's going to test our patience. It's working out, and I was watching for a push into $4,700. Okay, so the idea with this trade, because now Lucid is working out, slowly digging myself out of that hole, we start pulling back, and like I mentioned earlier, with the sellers at supply, if they don't put pressure on bulls to bring us lower, and bulls just hold price higher, that is a bullish sign. So if we go to test out those sellers at side of supply, if they're not showing effort, if they're not getting rewarded, and they start becoming underwater, sellers are technically buyers. For them to close their position, they have to buy to cover. So if they buy, that's just going to fuel a further rally to the upside, especially when we are consolidating inside of supply. That is a very, very bullish sign. So the first trade that I took was great analysis. It just did not work out. Respected my plan, stopped out when I need to. Now I'm focusing on when I can re-enter. As soon as we reclaim this 90 to 92 area, like I mentioned, I got long at 11:02 when it looked like this. My stop loss was below VWAP. I was risking about $5 to potentially make a 4,700 break, which was 8 points, and then 47.05, which was 13 points. So risk to reward was pretty decent. It was a higher probability just because of the intraday action. And then we start rallying, and just like the Lucid trade, the best trades for me, either A, work out right away, or B, risk-free once we move away from my entry, pretty close and pretty soon from my entry. So this thing, as soon as I entered, this thing rallied right above the $4,700. Again, working out. Want to see a high day push into 4,700. I'm going to look to scale out. It's a tough area of supply, which is why I'm favoriting longs here. There isn't any signs of selling, and buyers are holding us up inside of supply, something we've seen the past 2 months. Hit target $4,700, scaled some at 48 cents above my entry. 16 minutes later, next is 47.05 and then 47.10. Like I just said, the simple thesis for this trade, this is where market context comes into play. Understanding the auction. Yes, this is a major area of supply, so automatically it's a lower quality long. However, we aren't selling off from it, and buyers may be accumulating, basing at supply, which makes me think sellers are weak. Supply has not been reliable, and we haven't been seeing sellers becoming aggressive yet. So 4704 triggers, I get out remainder, or I get out, let's see here. Pull this up. I only positions, I get out, another 25% of this trade. I'm in now only 10% of my position on SPY, 47.05, in case this thing wants to continue rally. We get that push into the supply zone, and at 12:46, when the market looked like this, heavy volume into 47.05, I get out some there, and then the rest, just like Lucid, when I got back to my office, I was only in, I think, 5% of my position at this time. I got out the rest right here, and we missed, all-time high by 0.25, one tick. So perfect analysis. It doesn't work out perfect in a perfect world like this every single time. You have to respect your plan, honor your risk, and manage the trade properly. The key with this video, and I said this in the intraday commentary tab, is I took two very, very shitty trades. I'm not very happy with, how they planned out, and it sucks going down 0-2 to start the day. Perfect example to not put your head down after a loss. Let's just say I took those two losses and I shut down the computer. I say, oh, I suck as a trader. I'm awful, and I just lost, $6,000. Put my head down, how am I ever going to get myself out of that hole? That's not only going to mess me up today in the market and today in real life when I shut down the computers, but it's also going to mess me up tomorrow, probably the next day, because I know this is going to affect me. So instead of putting your head down after a loss, the idea here is to wait patiently for another opportunity. That SPY and that Lucid rally, made up for it. When I first started, I see this happen to a lot of people as well. They put their head down. They take a loss. They say, oh, I suck. I'm not good at this. I'm going to blow up my account. I don't know what I'm doing. That's the emotional game with trading. That's the psychological aspect to it that a lot of people can't control their emotions, and their emotions are their greatest enemy. They put their head down. They think they did something wrong. Like I said, that SPY trade I took earlier was a sick trade. I've seen it work out before. It just did not work out at that time of entry. Sometimes after exiting, it may be the best opportunity to re-enter the next few minutes. And this was when I was walking through that SPY trade. SPY Lucid, about $3. Exit full position, 4705, or close to all-time highs. So yeah, the key here is you take a loss. Do not put your head down. Instead, focus on finding another opportunity. That time you sell or you stop out, the next minute, next 2 minutes, 5 minutes, that could be the best time to enter, and you can make up for that loss like I did on those two next trades that I took on SPY and Lucid. So don't put your head down. Understand your emotions, control them, and once you do that, trading becomes so much easier. If this was me 5 years ago, 6 years ago when I first started, I probably would have shut my computer down. I probably would have went to go punch my pillow in my bed or grab like a stress ball and throw it at my wall and break the sheetrock. Not that much, but not that far. But it's discouraging. It sucks. But don't put your head down and focus on another good opportunity. So that's where I'm going to leave you on this video. If you enjoyed it, if you agree on it, drop a like, subscribe to the channel. And if you really want to learn more, check out the links in the description below. I offer a very in-depth and educational course that will come with access to the Discord at no extra cost. Here's some nice things for members today. This is what happens when you follow the process. The profits are the result. He doesn't know why it took him so long to join. His second day in here, followed what he learned in the course, and look what happened. $405 profit. Another member took that SPY trade, $478. We got another nice trade on SPY. This was the exact analysis that I took. Sellers weren't present at supply, only room to play calls. He took the same trade as me on SPY. Nice $615 profit. Been in the group for a month or two. Done a few small trades, practicing to get comfortable. You have to develop your edge. You have to understand what works for you the best. Took two small option trades today, and that's the result. If you follow the process, the profits are the result. Best trading day for him. Nice $861 win. 20% on his account. Took that Lucid trade, took the Home Depot trade, and took the SPY trade. All three nice gainers from the pre-market plan. And, no one's going to win them all. I have losses. Members have losses. It's about risk management. If your analysis doesn't work out, as long as you follow your plan, it's a win in my opinion. So, that's pretty much it. I'm ending it. Peace out.